You know that feeling when you're grabbing a flat white in Melbourne CBD and suddenly the weather flips from sunny to pouring in 30 seconds? That's exactly how Bitcoin's acting right now. 1 minute it's riding high, the next, bam, we're staring at a proper dip. Bitcoin is currently trading at around 108,500 AUD, 76,000 USD. Yeah, that's a solid pullback. And if you're in the space here in Australia, you're feeling it. Straight up, the global crypto market just shed nearly $500 billion in a week. Bitcoin tested as low as 73,000 USD before bouncing a bit, but sellers, they're still dominating. Over 2.5 billion in liquidations, thin weekend liquidity amplifying the pain. Guys, it's rough out there. But let's bring it home first, because this is CryptoLogic, and we always start with what's happening in our backyard. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news. Here in Australia, the big story isn't just the price dip. It's the regulatory train that's finally leaving the station. The Corporations Amendment, Digital Assets Framework Bill, is making its way through Parliament, and experts are pointing to mid-2026 for passage. That means crypto exchanges and custody providers will need proper Australian financial services licenses, bringing them under ASIC oversight. This is huge for institutional adoption. We've heard from industry voices that once this clarity hits, financial advisors and big money will start allocating to crypto properly. New products, more confidence, the works. But ASIC's key issues outlook 2026 isn't sugarcoating it. They flagged regulatory gaps in digital assets as one of the top systematic risks this year. Unlicensed players, rapid innovation outpacing rules. It's exposing consumers. Plus, banks are clamping down harder on crypto-linked accounts over AML and scam fears. Debanking tensions are real right now. And on a fun Melbourne note, a crypto firm like Nexo just scored major visibility sponsoring at the 2026 Australian Open. Tennis and crypto sharing the spotlight at Melbourne Park. That's mainstreaming in action. Now, globally, this sell-off didn't come out of nowhere. Geopolitical jitters, economic uncertainty, whispers of tighter policy from the Fed, and the new leadership vibes, risk assets got hammered. Bitcoin's dropped over 10 to 15% in recent days. Altcoins uneven, precious metals even rotated in. It's a reminder, crypto is still high correlated to broader risk sentiment. Time for a quick breather. Here's today's CryptoLogic joke. Why did a Bitcoin go to therapy in Melbourne? Because it had too many AUD identity issues after crashing harder than a tram on Burke Street. All right, back to business now. The CRYPTOLOGIC takeaway. This dip hurts, but context matters. Globally, it's a classic correction after euphoria. Liquidations clear out weak hands. Locally, though, Australia is on a cusp of maturing phase. Proper regs by mid-2026 could turn this from Wild West to legitimate asset class here. If you're a long-term bullish on Bitcoin, and as Sash from CRYPTOLOGIC, I've seen enough cycles to stay cautiously optimistic. These clarity moments are what separate noise from signal. But remember, I am not a financial advisor. This is education and opinion only. Always do your own research, manage risks, and never invest more than you can afford to lose. So, where to from here? Watch for BTC holding key supports around current levels or lower. If regs pass smoothly, expect Aussie inflows to help stabilize. Me? I'm keeping an eye on local developments while the global storm plays out. If this helped, smash that like button, subscribe for more Melbourne-based crypto truth bombs, and drop in the comments. Are you buying this dip or waiting for the red-green light? Hit the bell so you don't miss the next one. And until next time, stay sharp out there, stack sats wisely, and I'll catch you in the blockchain.